Welcome to the deep dive. Okay, today we're tackling something huge. Bitcoin hitting $200,000 by late 2025. Is that just, wild hype, or is something real brewing? We've dug into the research to explore this idea of a perfect storm of bullish signals. What's driving all this optimism?
Exactly. And for you listening, we want to cut through that noise. There's several big shifts happening all at once, really. They're creating these, unprecedented tailwinds for Bitcoin. So our goal here is to give you the context, the clarity to see why these trends might be so powerful.
All right, let's get into it. The U.S. spot Bitcoin ETFs, everyone points to these as a massive deal. How much have they really changed the game for Wall Street getting in? What have we actually seen?
Yeah. Oh, it's fundamental. I mean, since approval back in January 2024, it's like Bitcoin suddenly became as easy to buy as, say, an S&P 500 fund for many investors. And that just opened the floodgates. Huge amounts of capital, both institutional and, regular retail money. Look at BlackRock's IBD. It pulled in, over $80 billion in just over a year. That's reportedly the fastest growing ETF launch ever. And that's a big reason, a really big reason why Bitcoin's market cap soared past $1 trillion by mid-2025.
Wow, okay, that does sound incredibly bullish. But we should probably talk risks, too. Could we see, market saturation? Or if things slow down, could money flow out just as fast and push prices down hard?
That's absolutely a risk, yes. High inflows are great, but if sentiment shifts, outflows can be just as traumatic. It makes things potentially more volatile, not less, in some ways. So there's definitely something to watch.
Okay. So beyond the money flowing in, there's also this big shift in regulation, right? Moving from kind of murky territory to clearer rules. How is that green light actually legitimizing Bitcoin for the big players, the institutions?
Yeah, this is foundational, not just market noise. You've got things like the SEC's Project Crypto from July 25, the CFTC allowing spot trading on regulated exchanges in August 25. These moves are basically clearing up the gray areas, and that directly lowers what they call career risk for fiduciaries.
Ah, right. The people managing pensions, endowments, that kind of thing.
Exactly. They need regulatory certainty. Getting that makes them much more comfortable putting client money into Bitcoin. It's definitely a key driver behind Bitcoin pushing past $124,000 around August 2025.
Makes sense. Clarity helps. But, regulations can change, can't they? Could we see policy reversals? Or, there are still questions about all those other cryptos, the altcoins, are they commodities, securities? Does that uncertainty pose a risk?
Definitely. Good point. Progress has been really strong, but it's not set in stone. Unexpected reversals or even just lingering confusion about the wider crypto space could definitely introduce new headwinds. It's still evolving.
Okay, let's switch gears a bit. Something that seemed almost impossible a few years back, big banks getting involved with crypto, feels like a real mainstream moment.
It really does. That JPMorgan-Coinbase partnership announced in July 2025, that's huge. Suddenly, millions of Chase customers can link accounts, buy crypto, maybe even use credit cards. That kind of integration, it's a massive validation. It signals Bitcoin as like a new asset class within the traditional banking system. It just removes so much friction for ordinary people wanting to get involved.
Yeah, easier access is key. But again, the potential downsides. What if there's a big market downturn? Could banks get cold feet and pull back? Or are there risks with the tech itself? Security issues? Glitches?
Both are valid concerns. Banks are, sensitive to market conditions. A major crash could certainly see them pause or scale back involvement. And yes, integrating this new tech isn't simple. There's always a risk of technical problems, security vulnerabilities. They need really robust systems.
Right. One more big piece, the halving, Bitcoin's built-in scarcity feature.
The halving, right. April 2024. It cut the new supply of Bitcoin coming onto the market by 50% automatically. That event really reinforces the whole digital gold idea, finite supply, increasing scarcity. And historically, these supply shocks, they often come before big price increases, big bull runs. And it's pretty striking that Bitcoin has roughly doubled since that last halving. Seems to be following the pattern quite closely this time, too.
But isn't some of that expected effect already factored in by the market? Priced in, as they say? And couldn't, major global economic stuff, interest rates, recessions, whatever, just override the halving's impact anyway?
You're right to ask. Yes, sophisticated markets do anticipate these events, so some effect is likely priced in beforehand. And absolutely, big picture macroeconomics could definitely be the dominant force. A global recession or major geopolitical event could easily overshadow the halving dynamics. Nothing happens in a vacuum.
So putting it all together, $200,000 is still a very aggressive target. Bitcoin's volatile, we know that. For you listening, how can you track all these moving parts sensibly without getting swept up in the hype?
Yeah, it's crucial to stay informed but rational. I'd say track reputable news, obviously. Keep an eye on on-chain data, things like network activity, transaction volumes. That gives you a real-time pulse. Follow the institutional flows, especially those ETF numbers we talked about. And watch the regulatory developments closely. But honestly, the most important thing, sound risk management. Know your own tolerance. Don't bet the farm. Stay level-headed. It's the combination of all these factors that's interesting, not any single one guaranteeing a price.
Right. So it really seems Bitcoin's path in 2025 hinges on this unique mix, the institutional money, the clearer rules, banks jumping in, and that underlying scarcity.
It really does. And maybe the final thought for you is just how fascinating it is to watch these forces change things. It's not just about crypto anymore. It's actually reshaping parts of traditional finance. It makes you kind of step back and ask, what is a store of value today? What counts as a legitimate asset in this, rapidly changing financial world we're in? Makes you think.